The Nasdaq 100 Composite Index has been in a relative freefall through 2022, giving up much of 2021 gains as Omicron-induced shocks set the tone for further contractions from inflationary pressures and Russia's invasion of Ukraine. The index has fallen 11.29% in the last week under the weight of accelerating inflation, an interest rate hike by the Federal Reserve on June 15, and increasing fears of an impending recession. Will stocks recover after months of correction, and what factors shape the Nasdaq forecast for 2022? The Nasdaq 100, sometimes referred to as US Tech 100, or US 100, is a composite index of the largest non-financial companies from across the globe that are traded on the Nasdaq Stock Exchange. The Nasdaq 100 index's biggest components, on June 17, include Apple, Microsoft, Amazon, Tesla and Alphabet, with stocks weighted in proportion to their market capitalization. The index is varied by industry, with major tech stocks making up a majority of the pack, bolstered by other sectors, such as retail, automotive, pharmaceutical and hospitality brands. Taking a long view on the US Tech 100 analysis, it could appear that the heavy gains in 2021 are challenged by a highly uncertain 2022. In many ways, the index and its companies came of age during the COVID-19 pandemic, growing more than 47% in 2020 and around 26% in 2021, as tech companies realized their value in no small part to lockdown and new patterns in home working. Up to June 17, the index has lost 32.2% year-to-date. Recent falls have seen a number of companies languish near the bottom of their 52-week ranges, with names like Netflix and eqqq losing more than half of their value in the last 5 months. Recent signals, such as including the suggestion from the U.S. Federal Reserve favored personal consumption expenditure measure that inflation might be peaking coupled with an oversold investor rally, mean the index snapped out of a 7-week losing streak and has started to realize gains. In the last 12 months, the 5 worst performers in the index were tech stocks. The recent struggles of Netflix emphasized a sudden shift in investor confidence for tech. Meanwhile, Zoom Video Communications has lost nearly 70% of its value in the last year as COVID-19 gains were pared back through the growth of rival services like Skype and Microsoft Teams, and the gradual reduction in home working. A short-term Nasdaq 100 technical analysis on June 17 showed slightly pessimistic signals for the future of the index. Oscillators were indicating sell, with a subdued relative strength index of 33.67 as recent rises pivoted the stock away from oversold territory. An RSI reading of 30 or below would signal an oversold or undervalued condition. Meanwhile, the index's momentum oscillator was in sell at -1,765.31 and the moving average convergence divergence level was in sell at -349.24. The index was trading above its 10 and 20-day moving averages, indicating bullish momentum. The Nasdaq 100 was not unique across major indices in realizing big gains in 2021, as a macroeconomic context of recovery accelerated most stocks over the year. Tech stocks have been rewarded for servicing the increased demand for home working, allowing the sector to grow throughout 2021. Chipmaker Nvidia, for example, was up around 225% through 2021, while Apple added to its already massive market cap with 2021 growth of 38%. Peter Stumpner, Solution Associate Partner in Strategy and Corporate Finance at McKinsey & Co., noted that the majority of the market cap added to the stock market in 2020 to 2021 came from American and Asian tech companies. But even as COVID-19 forced contractions among the index's hospitality and retail cohorts, most companies managed to offset losses with mid-year runs, including Airbnb and Starbucks, that helped smooth out the tail end of the index last year. Costco, similarly consumer-oriented, continued to reach new heights. Those factors contributed to the Nasdaq's 100's strongest 3-year run since the late 1990s, when the dot-com bubble halted 5-year gains that had seen the index double in 1999 alone. But the circumstances that characterized the rise in 2021 have been turned on their head this year, with the current Nasdaq 100 trend likely to offset any sector-specific gains the index may realize. In the latest Nasdaq 100 news, inflation is beginning to look like a big problem for Western economies, with the annual rate hitting a 40-year high of 8.6% in the US, 8.1% in the Eurozone and 9% in the UK in May 2022. The US is seemingly fighting a number of fires on inflation, most recently the jump in commodity prices following Russia's invasion of Ukraine. Crude oil is hovering around a 14-year high as Western economies begin to cut ties with Russia and look to other sources for energy, adding to the effects of massive liquidity in the stock market and on consumers' balance sheets last year that encouraged a wave of spending. The rollout of U.S. President Joe Biden's $1.2 trillion infrastructure bill through the year might be expected to put further upward pressure on the prices of goods, services, and materials. That has pushed central banks into action. Accelerated tapering and multiple interest rate hikes are expected this year. The effect of that on stock-based indices is likely to be twofold. First, the pullback of government stimulus amid rising prices, in addition to the cost of borrowing set to rise in 2022, means retail and hospitality-focused companies on the Nasdaq are more likely to see their margins hurt. Most tech companies are also dependent on a bullish investing environment which encourages risk-taking and innovation, something looking increasingly unappealing during times of economic war. The ARK Innovation Fund's performance, headed by Cathie Wood, has been emblematic of risk aversion, falling more than 55% year-to-date. Second, the promise of stronger yields has seen investors begin to move money into safe havens. The yield on the benchmark U.S. 10-year Treasury note recently topped 3.483%, a high not seen since April 2011, in a sign of conservatism among investors looking to consolidate previous gains. The U.S. dollar, meanwhile, is floating around 20-year highs. That sentiment has been strengthened by aggressive contractionary monetary policy, with the Federal Reserve Monetary Committee invoking a 0.75% rate hike on June 15, after already rising rates in May and March this year. The level of the Fed's benchmark funds is now at a range of 1.5% to 1.75%, the highest since just before the COVID-19 pandemic began in March 2020. A reversion to pre-pandemic behavior has been met with battered confidence through economic contraction and the Russian invasion of Ukraine, pointing to a sustained bear market at least until demand destruction pulls down inflation and begins to reverse rate hikes. But if sanctions and supply crises continue, even that may not be enough to spark another bull run. The outlook for the Nasdaq 100 index is split between bulls viewing bumps this year as small hiccups, and bears more concerned that trouble lies ahead for equity markets. Algorithm-based Nasdaq 100 predictions were mixed on June 17. Leo Profit projected contraction throughout 2022 after some mid-year volatility for its Nasdaq outlook, ending December 2022 with a price target of 11,030.50, close to a 2% fall on its current rate. By December 2025, a price target of 13,405.10 reflected an upside of 17% on the current level, an extremely modest Nasdaq 100 performance relative to the growth the index has experienced in the last 2 years. Wallet Investors' US 100 forecast for 2022 was skewed towards more optimism, with the index expected to continue its ascent through the year, with a 23% upside to a December price of 14,234.9. The index was not expected to abate in the long run, closing in December 2025 at 21,882.20. Please note that algorithm-based Nasdaq predictions can be wrong. Forecasts shouldn't be used as a substitute for your own research.